Okay. Good afternoon, ladies and gentlemen. Thank you for the invitation, and thank you also for putting the post office on the agenda of this summit. Post offices are not always the most popular item in money transfers, but I would like to give you a brief overview of the actual role, the issues, and the developments in postal financial services, how it fits in the business model and concept. And from there we would like to go to a very practical case, a real life story of Uganda, and to present to you Mr. Fred Wasiki with the project he's implementing with the Post Bank and the post offices in scaling up remittances delivery. So if we talk about postal financial services, what are we talking about and what is the role in financial inclusion? It is actually a very significant role playing in financial inclusion, but not everywhere and not always as successful as it could be. You could say that in about 100 countries worldwide, postal financial services or post office banking or postal savings play quite a good role for the mass market retail banking, providing a broad range of services, and the post offices in that concept really act as a distribution channel, as the touch point or the point of entry for cash in, cash out, personal identification, but also for transparency, consumer protection, financial education. In this way, it's actually part of the financial sector linked with payment systems and contributing to the movement from transition from cash to cashless. Briefly, an overview, you could say the arrow which goes into the circle is really made up of remittances, cash in and cash out payments for utility bills, pension payments, grant money, and other cash transactions. But the success of postal banking is really to step into a basic transaction account linked or stored into a client database and interoperably connected with quite a broad range of financial services, which can evolve over time and depending on the market opportunities and needs. And this is not all in one institution. It can be in a variety of financial institutions or partners working with the post office. It should also be clear that the postal banking concept is not only post offices, but like we also heard in other presentations, it's a multi-channel concept with post offices, face-to-face, call centers, mobile, internet, social media. Today, worldwide, there are about 1.8 billion accounts held by postal banks. And you could say the usage is with 1.1 billion clients being really banked and using an account, and there's about 0.9 billion users which use the post office as a channel for cash in and cash out, including remittances. If we look at the historic development of postal banking, we could talk about life cycles, and some associate the postal banking or post office savings bank with something very historic. It's correct, in 1861 it started with a very traditional post office savings bank, but that has actually already reached the end of its lifetime. However, this was a very popular concept, and we still see in about 25 countries worldwide this model still in place, which is actually a model obsolete and not functional and missing much of the potential for the financial inclusion, but also a risk to enter into remittances. In about 75 countries worldwide, we see the transformation into a partnership or into a bank which is regulated and or supervised by the central bank. The latest trend is that actually we see more a digitalized postal financial institution which uses the post offices as the physical point. A global overview would indicate that parts of the world are not active at all in postal financial services or postal banking. Those are the blue-collared countries, particularly North America, but also a large part of Latin and South America are not active in postal financial services. The green-collared countries feature different models, but they could be grouped around the idea of an existing licensed financial institution using the post offices as their agent network, whereas the yellow-collared countries is a separate bank, but we also have multiple banks working with the post offices. The red-collared countries, and you see most of them in Africa, are those countries where transformation has not progressed and they're stuck in a model which is not really effective in today's financial sector. We could say today the postal banking concept is something relatively self-service, standardized, simple, attractive for the mass market segment, with not too much complexity, and for also poor and underbanked people. It has an overlap with digital financial services because many of these services can be provided through the digital channels. And in that way, it might be slightly different from traditional branch banking or traditional microfinance institutions. In terms of remittances and postal networks in Africa, we could say the main strength, the main relevance is the delivery of value in rural zones. There are about 26,000 post offices in Africa. They are quite evenly spread over the countries and over the continent. And very remarkable is that 80% of these post offices are outside the main urban centers. And therefore, if we look at the IMF figures, and we would say how many outlets are there per 100,000 adults, then you will find there are more bank branches than post offices. But if we look at the rural areas, you find about 3 times more post offices than bank branches. So it is really in complementary access infrastructure. And in that way, it is very relevant also for remittance delivery, for bringing the remittance delivery closer to the rural recipient. The current flow of remittances in Africa to the post offices is estimated at slightly more than $5 billion, which is about 8% of the total flow. But again, this may be a little bit not presenting the picture very accurate. If we look at Egypt and Nigeria, then we find the post offices inactive, but these are the 2 largest remittances markets in Africa. So if we look at the other markets, then it's and there are quite a couple of countries where the market share is very substantial. Like in Senegal, you find a market share of 35% handled through the post office. And there are other cases with 20%, 15%, and also cases where you find really close to 0% or 1%, because again, the post office not being active, but actually having a potential to do much more. We also see quite a number of differences. Most, as you see, many countries which are colored gray, have some form of activity. The yellow-colored countries are those where Western Union is mainly active with the post office. The red-colored where MoneyGram is active. Orange, and this might need to be updated a little bit because of a few missing, has made a good entry. And the gray one, which is in the right bottom corner, you find a large number of digital and mobile cash out players. This has evolved at a much higher pace, which, for instance, World Remit and Small World Financial Services have made a very good entry in the market and signed up with a large number of posts and much more, actually, much faster than the bigger players. And this is also likely to bring the perspective of the future. It is definitely not that a post office is anymore exclusively connected to one MTO, but increasingly we see a kind of a supermarket model where the post office is delivering for multiple MTOs and where it's also really connected. The cash in, cash out for remittances is a step towards financial inclusion. The left picture on the bottom, the blue colored are the postal money orders. It's a very old system. It's still existing with some support of technology, but the actual flows and volumes are really a micro or very small scale. There are quite a lot of things to be done to make it work in the post office. And we could basically say postal networks, although it has the word network, they need to be networked, which means they need to be ensured of power supply, which is in many cases, especially in rural areas, not sure. ICT equipment and trained staff, connectivity, cash logistics is a major issue, but also a major opportunity for strength of the post office to have sufficient and large-scale cash. If we refer, for instance, to the case of Senegal, there is on average per post office between $10,000 and $20,000 in cash inside the post office every day to be able to pay out the remittances. Another challenge for post offices or post banks is the interoperability across different payment systems and across borders. And one other particular challenge is, especially if we don't talk about a postal bank, but about a post office, how do they fit actually in the regulated financial sector? This is sometimes a major hurdle, the institutional and regulatory framework, which keeps thinking as a monopolist outside the financial sector and therefore not being operating in compliance. This also means also for MTOs a risk in such cases, because then the risk is really existing that customer money is eventually used to cover losses in the postal operator. So this is where the other elements need to be addressed very well. The postal networks really see the potential and future in one-stop shopping, not just remittances or not just postal savings, but a complete retail banking package. It's more like a supermarket linked and using a digital platform, which is not only for financial services, but also for e-government services, for e-commerce, and for e-learning. And the trend, and that's, I think, a very positive trend, is that post offices have come to realize that they cannot do everything on their own. They need to build partnerships, although that is quite often a challenge, but it's done. That's in brief the overview I would like to give. So summarizing, there is a relevant network in Africa. They play in many markets quite a good role, which could be further leveraged, but that leveraging or that expansion depends on building more partnerships. If you would like to read more about this, there are several publications prepared. One of them is by IFAD on remittances and the post office in Africa. There's a large book published by the Asian Development Bank recently on postal savings. World Bank has a publication on Azerbaijan, which you could use actually comparable for other cases. I would also like to refer the money transfer operators here to a set of recommendations or guidelines for improving the collaboration between money transfer operators and postal networks. And if you think about what is the market research, there's been a very broad market research 2 years ago with about 4,500 face-to-face interviews on how remittance recipients view the post office, and the implementation and especially the results achieved of a recent project undertaken by European Commission, IFAD, but in collaboration with World Bank, show that it is quite possible to grow this business within a reasonable short time, within, say, 12 to 16 months. You could double the existing flows handled through the post offices, which is not completely reliant on technology. It is really marketing management, financial management, compliance, training of staff, and marketing inside the post office and outside the post office. Those are critical factors to make it work. Thank you very much for your attention. I would like to introduce to you Mr. Fred Wasiki. He's a director of the Post Bank in Uganda and working on the project to scale up the remittances, also in collaboration with the post offices in Uganda.